Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Friday. It is the 31st of May, the end of the month. Stocks gapped on the open and just kind of never really recovered, closing near session lows as we have been very accustomed to, trade war stuff. This time a shot at Mexico yesterday afternoon really got things selling to get today going and ending a pretty darn bearish, week and a fairly bearish month here in the market as well. Welcome out, everybody. I hope everybody had a great day both in and out of the market as this trading week comes to an end. Just a quick reminder to everybody, of course, we've got our STEP webinar coming up on June 5th. So if you haven't had a chance to check that out, I would certainly encourage you to do so. You can head over to tackletrading.com, or you know what, I can probably, let's see if I can do this in real time, put it in the chat here, maybe. Hey, there we go. Hey, there we go. So it might not have looked very smooth, but it was effective. So, I certainly invite you out. Look forward to seeing you guys there. I know many of you probably already are set up for that, but should be very educational and quite a bit of fun for sure. On the earnings side of things, not a big week going into next week. The stories are going to continue to be the same stories that they are. Trade war, and a little more trade war. And maybe can the Fed save us, right? A little bit of that starting to creep in as well. Will the Fed step in and save the market? We will have to wait and see. We do have a handful of S&P 500 companies that are reporting here tomorrow, or not tomorrow, next week. So including Campbell's, James Smucker, Salesforce. Not a big week, though. Really light on the earnings side. And good afternoon to you as well, Pascal. Great to see you as always. Hope you're doing well. And I hope you had a great day trading here today in the market. It was just, we kind of started selling. It was around 4 o'clock or so my time yesterday afternoon, where all of a sudden, I looked at the futures and zoom, they were moving to the downside. Had to go take a peek, and yeah, it was a Trump tweet on tariffs, turning attention to Mexico. So that'll be another storyline in the ongoing story that is the trade war. As you look at the S&P 500 chart, we gapped right through that previous low, which for me was kind of the confirmation point, as you guys know, and really just never recovered. We rallied a little bit early in the trading day, not a whole lot of conviction, I don't think, behind that rally. But we did rally up a little bit. But the second part of the trading day, we just drifted to the downside, closing, at or very, very close to the daily lows. Not a great looking candle. Looking at it on an hourly time frame, looks just as bad, right? Below all the moving averages, below, lower highs and lower lows for quite some time. And of course, looking at it on the daily front, this is a pretty darn bearish candle. Basically full body, almost red candle. Hard to say that there's anything that says Monday should be the day that the buyers step back in to the market. And so from a technical point of view, I don't think any of us probably expect that. I don't think there's any real reason to expect that at this point. On the S&P, from a support perspective, for me, I'm looking at that 2720 is kind of that next level that maybe can prop the market up. If we look at this, I just want to take a quick peek on the weekly. We talked a little bit about it, and we were talking about it last week. Looked like it may have been a little bit of a pullback on the weekly last week. It could have been this week too, but that's not the way it went. Certainly that pullback has kind of been violated. Really not a lot of price history until we get into that 2720 or so range. I don't expect there to be a lot of great technical reasons, at least, to buy into the market as a general rule until we start to capture some higher lows and higher highs. Some of these moving averages right now pretty darn ugly from a bullish point of view, pretty nice looking from a bearish point of view. Good afternoon, Tanner. Great to see you. Yeah, Friday. It was a weird week. It went by it's always weird for me when there's a market day that's closed. Mondays, or usually it's Mondays, but occasionally a Friday. When the market's closed on a weekday, it just feels really, really weird to me. And so hopefully I'll catch back up this weekend, and it'll be back to normal here next week. On the Dow, every bit as ugly, arguably more so in my mind. There's really just no support. Anything can and ultimately may develop into a support zone. But as of right now, as we speak right now, I have a hard time seeing anything of any substance until we get to 24.2, hanging out at 24.8. That's still 600 points of potential downside before we start to hang out at support, or at least get into these support zones. So again, another very good reason not to want to be super bullish as we move into next week. If for whatever reason you were a super bull, I doubt anybody here was. And good afternoon, Linda. Great to see you as well. The NASDAQ made my life easy today. I'd preferred, as you guys know, basically all of the other indexes from a bearish perspective, because the NASDAQ just had a few more things holding it up, whether it was the swing low, the 200, the $7,200 or 7,200 mark. Today, it flew right through all of them, and I no longer have to worry about them, any one of them potentially acting as a little bit of a support catalyst. Closing below the 200, again, a very ugly candlestick, top to bottom, closing at the bottom, very, very ugly, not a really good show for anything going into at least early next week. I don't think any downward movement on Monday, I would imagine, will start to trigger more sell orders with charts that look like this. So pretty ugly. On the support side over here on the NASDAQ, we do have a little, and it was important, it just wasn't maybe major at the time. We do have some support at around 69.30, the swing low that we had back through here that could potentially act as a catalyst for us. So that'll kind of be where I'm looking for that first level of support as we continue to work our way down. And on the other side of these things, these breakout points, along with the falling 9 and potentially, depending on how it goes, the falling 20 will be things that I'm looking at as well. So, on the Dow Jones, as long as we're below this breakdown point here, I think you have to have, even more of a bearish stance than we've had, which of course we've been leaning bearish for a while. I'm going to kind of use that along with these short-term moving averages, specifically the 9, because that's going to catch up pretty much on our indexes, probably fairly easy. The 20 would be nice, but it's a little slower, so it may depend on how it actually plays out. But that's kind of how I'll be looking at resistance for the Dow. Same type of evaluation on the S&P 2800, along with that 9 EMA and potentially the 20 if it catches up, and then 7200, same thing over on the NASDAQ. Over on the rut, we kind of worked all the way into, not a major level of support, but an old support zone. We have had a little bit of price action here. Beyond this, there's not a lot. There's lots of little things. Those of you who were around back with me in last fall will remember them. We do have, a little bit of history around that 1440, but beyond that, there's really not a lot until we get closer to 14 on the rut. So this certainly doesn't have, it has some little things that may catch it from a support perspective, but really they're nothing that would concern me. They're not going to be so tempting that I think we buy off of those bounces. We did hold this short-term zone here today for whatever that is worth, but the rut's probably going to go with the rest of the market, right? And maybe even lead the rest of the market. And so again, have to be careful from a bullish point of view. There's still things out there. Our utilities did nice, at least did okay today. We'll take a peek at our watch list that we walked through yesterday, see kind of where it all came together here at the end. But again, we're going to have to be very cautious as buyers. Certainly, I think just like we've been continuing to be skewed to the bearish side, I think this just pushes us a little bit more there. And that's usually how I think, is kind of you work from being bullish to bearish and bearish to bullish. I'm not generally the type of person that's going to change dramatically overnight. It steps, right? Breaks that level of support. Got to call that a signal. And certainly, I think just another reason to be even a little more cautious or a little more bearish here today as we get into June. Now, I think it's very important that we all remember the market conditions that we're in. We're a positive tweet away from at least a little rally. It might be a one-day rally and a one-day gap up rally. So I don't think there's any reason for any of us to suspect that our volatility is gone. Like it, love it, or hate it, it's still here and probably not going away anytime soon. As you can imagine, most of the sector ETFs are going to be feeling the burn of that gap down here today. Certainly the materials sector is no exception. We do have a little bit of history at around that 52 mark. Overall, as we've kind of talked for a little while now, and this was true before today, certainly it's more of a bearish vibe, I think, on the individual components. You had, Dow DuPont. I've got these guys in my watch list for a breakdown here, as you can kind of see, kind of thinking out loud on the trade breakdowns. You still have a few things that are maybe back into neutrality. I do like Lin. I do like APD, as you guys know. I don't think they're bearish, but certainly not as bullish as they once were. But then you've got, Sherwin-Williams, pretty darn bearish, close below support, below the 200 here today. You have a few things, ECL, APD, Lin, a few things are still holding up. You saw some really nice movement on Newmont over this last little while, and actually had a pretty big day here today, popping and really kind of getting back into some sort of sidewaysness, if nothing else. So I don't think it's quite as bearish as maybe the chart would indicate overall, but I do think it's still skewed to the bearish side of things. I think a lot of the things that are holding up well are looking a little more like very cautiously bullish than excited bullish, if you will. So on the ETF itself, I'm going to continue to watch this 52 as that first level of support. We do have some history on this ETF in that range. Beyond that, 50, kind of that next level, just like everything else. I'm going to be looking at the breakdown point as that first level, along with that falling 9 exponential moving average. So numerically wise, it's about 54. Getting back on the right side of that would about what I'd need to see to start to have a bullish outlook on the sector as a whole. Nothing really changed there. Energy continues to be just a wonderful place for the bears. A ton of selling over in crude today, more selling in the energy sector. Most of the energy stocks continue to really struggle. Very ugly candle here today, just like everything else. Unlike materials, where I'm going to keep an open mind. The charts are telling me to be more bearish than bullish, and I think most people would agree with that. But I'm going to keep, I'm not fundamentally opposed to many sectors if a bullish trade presents itself. Right now, though, I am opposed to anything bullish in the energy sector. It continues to be bear or bust for me. As we're moving into next week, there's just not a lot here, as we've talked about before. That doesn't mean we're going to fall all the way back down into that $53 or $54 range. But as we speak right now, there's just not a lot of support. And this definitely is kind of trickling down into the individual components within this space. I know we've looked at them a lot, but I think it's important to always kind of refresh, if you will. They're struggling, right? Big breakdown on ExxonMobil. Chevron, when we had kind of right at that support level yesterday, breaking down here today, a little bit lower highs, lower lows. So if it was even showing any strength, that's kind of gone. ConocoPhillips, it did have a little bit of a bounce back day, but put in a new low as well. EOG, just another rough day at the office for these guys as well. Apparently it was such a rough day, they don't want to show up on the chart. So I'll give them a moment here and see if they do want to show up. Always fun when that happens. It's kind of windy at my spot. I wonder if my internet's being weird. Well, let's just skip them and see if somebody else will pop up. All right. Well, maybe we're not meant to look at EOG, but another breakdown on Oxy. I mean, Oxy's just had a horrific beating. EOG working into some old lows as well. So I mean, this I can't see a bullish argument really in any way, shape, or form in the energy sector. As you guys know, I'm going to continue to be, basically bear or bust as we're working through, at least going into next week. I don't think there's any reasons to believe that the market's turning around, but I definitely don't think there's great reasons to believe energy is magically going to do it next week, or at least starting next week. Over in financials, much like the market, closing back down at that $26 mark. Again, this area is still a little bit more on the mixed side of things. There are some things we've looked at. We've looked at the Chubbs and the Aflacs and things like that. Still, in my mind, a lot of it, certainly not all of it, but a lot of this is the weight of the banks continues to be just that. I know we've been watching Goldman Sachs these last few days for a break. They took out support here today. Nice clean close below that support zone. Can only use my rules to kind of think about, but downward movement is confirmation of that break. So, the banks continue to show me the most weakness collectively in this space. But again, it's starting to kind of weigh a little bit on some of the other areas. You have, your T row still kind of hanging in there at its support level, but it's kind of knocking right on that door. Ameritrade, I know not an S&P company, but another one of the brokers, already broken down. You're still holding in there nicely on our things like ICE. ICE was able to actually hold its breakout here today amidst all of the selling carnage. So I'm still open to areas, again, I'm certainly skewed to the bearish side on basically everything except, maybe utilities and the REITs right now, and a little more neutral maybe on the staples. I haven't turned on them, but I'm still very open to, some of the stronger performers. The banks continue to be, in my mind, the biggest cause for concerns in the financial sector. Now, that's the market keeps selling. It's probably going to drag some of the other areas down with it. Over on the industrials, pretty ugly close, closing right at that floor here. A little more movement on Monday morning. And that's going to take out that floor, take out that support zone, looking like a pretty darn bearish situation for me. We really don't have a lot of support until we start approaching around 70.50. That's kind of a level that we have had some bottoms. We've had some nice support bounces off of that price range before, but not a lot between where we currently stand and where that 70.50, 70.30 zone is. I expect any downward movement to put more pressure on the industrial sector. On the other side of it, again, pretty common theme for me at least, it's the breakout point plus the 9 EMA to give me any signs for positivity. Now, we still are seeing some okay strength in the defense industry. I'm still open to that from a bullish point of view. The waste services, all of them were looking good. We looked I think we looked at RSG yesterday, probably the nicest mover here today, but they're doing all right. But we've seen quite a few ugly things in the industrial sector as well. I think we also looked at AIM. They were in that watch list we put together yesterday too, breaking that support, closing below it, another very bearish candle. So looking for primarily breakdown candidates going into next week with the industrial sector. But there are those industries that, or at least in my opinion, showing strength. And if I'm looking to buy something, that's what I'm trying to get into. I'm not trying to pick the bottom on anything, as you guys know. So over in tech, more selling, much like the NASDAQ, closing below that 72. Depending on how exactly you're going to draw your line, we're either right on top of this old level or old zone, or we've broken it, or we have a little bit of room to go. I think it's probably likely to be going the way of NASDAQ, continue to be looking for more selling. Really the next support zone around that $69 mark where we had that swing low. We do still have that flat 200-day moving average that could potentially try to act as a support catalyst for us. So kind of keep an eye on that as we're moving forward, but not a great look in the tech sector. Still don't really love it, even from a bearish perspective. But I mean, it's hard to say positive things about this chart. We've held up relatively speaking, but it's a little more neutral right now. Still holding the trend on Microsoft I'll remember that when we start to see, the market turn, if that happens in the relatively near future. But, much more neutrality in my mind. Apple just continues. It's hard to be excited about that chart in my mind. It held up better than maybe some other stocks out there this week, but it's still pretty darn ugly in my mind. We could still see with a snapback in the market, potentially breaking out on things like Visa and MasterCard. They're still holding their trends, kind of like Microsoft, a little more neutrality in the upward trend, I think. Of course, we all know the story with Intel, but they're kind of trying to build a little bit of a floor. Have to give them credit for that. I think most people I know like Cisco as a stock. I know I do. Don't like the way this chart is looking, though. Not really any confirmation necessarily to the bearish side, but certainly not reasons to believe it's time to turn around. Then Oracle breaking a recent breakout point. That's never what you want to see. Nice breakout, come back and test it and just fall right through it. We do have a rising 200. So, I don't think these look, the tech sector overall looks as ugly as many of the other sectors, but that doesn't mean it looks good to me. And so I still not really all that excited one way or another about tech, but I think just like pretty much everything else, or at least the aggressive sectors, you have to have that bearish skew to it still. Staples kind of got hit here today, taking out that support level, not able to capitalize on the momentum. This is a little bit of a trend violation, and I do think we have to throw a little bit of cold water on this sector. Now, I'm not going to go crazy, and I don't think overall it's time to be bearish. I think there's better alternatives out there personally to be bearish on. This, with the way the market moved today, this was, very likely to happen, right? It drug, our Staples down with it. It is what it is. We have broken that trend. I kind of want to recapture that zone before I get excited. But as you saw when we look at this weekly chart, I mean, certainly not the candlestick you'd want to buy the very next time you saw something, but still, could potentially turn into a deep bullish retracement. I think we have to be a little more careful with this space, but I am still cautiously open to it. I'm not really bearish on Staples, more so as I say, yeah, this is a bearish signal. You have to call it like you see it. We don't really have any real support of note until we get back to this swing low. We broke the 50. We've broken support. Hard to want to be a bull on it, but I don't really want to be a bear personally at this point. I think there are better alternatives out there. And well, I don't know, you guys are probably seeing the same thing I am. It's not hard to find a bearish trade in this market. So we have options, and I'll continue to kind of watch that one play out, see how it develops over next week. That could, the next few days of price action could sway me one way or another. But I didn't really think a lot of the charts that I was going through my scanning today in that space were looking particularly bearish. They had a little more of maybe a technology vibe on some of the things like the Visas and the Microsofts. Yeah, we've seen some that have been hit pretty hard, like Tyson and things like that. So it's certainly a little less exciting from a bullish point of view, but I don't think the Staples, it's time to turn on them personally. Over in utilities, we were able to catch our footing here today. I'm sure you guys probably found the same thing, but I found a lot of interesting candidates in the utility sector going through my scanning here today. I'm certainly interested in this pullback. Let's see if I can actually find them. They're down here at the bottom, but I found quite a few. I know we've looked at AEP before, some upward movement, kind of a little bit of a start. You have AWK, the water utility from we had in the report a few weeks back in the stock or the options report, I can't remember, kind of some upward movement. Same with a CMS. So many of the utility companies are showing this very similar type of bullish retracement pattern. Deeper one over on LNT, not really my style, but certainly still a pullback in my mind. Hanging out on SRE, WEC, and this is certainly more utility stocks than I usually have in my weekly watch list personally. But I think this is a very interesting pullback opportunity, especially if we don't go into sell everything, right? I think if we kind of are, we continue to sell, but we always suspect when there's days like this, right, where it just doesn't matter what you are, why you are. good chance you're going down or up just because the market's going crazy one way or another. If we kind of simmer down a little bit, I personally like this pullback that has developed here in the utility sector. I'll certainly be keeping an eye on some utility stocks early next week. On the actual ETF, if that's the vehicle that I'm looking, while I will respect that 59, we do have some history there. Having broken through it, that wouldn't be I'm not expecting that to be a major level of resistance. If and when we get there, I'll make a note for sure and keep a closer eye on things. But I would expect that if there's some oomph to the pullback, 59 shouldn't be a particularly strong level of resistance. I think the 60 is what I'll be keeping a closer eye on personally. Over in healthcare, holding the support zone, one of the few charts here that actually was able to hold support. Now we're right there. This could give as early as Monday morning, right? But for today, unlike pretty much, everything except your utilities and our REITs, we were able, nothing held support here today, even, short-term support. We were able to hold that over in the healthcare space. Again, this is an area that I am very open to. I'm really a big fan of the patterns that we're seeing on things like Anthem. And in different market conditions, probably my favorite trade setup going into next week might be Anthem here. We've held up nicely. We've seen UNH. We've seen some of these things like Merck show some signs of turnaround. We've consolidated as opposed to sell off in the market. This is one of my favorite breakout type of patterns personally. And so I'm seeing things like this that I'm certainly interested in and certainly we've looked at Merck a few times too, kind of sitting on that trend line that is kind of put together now, putting in some higher highs and higher lows. But on the other side of things, where'd we go here? I have one too many watch lists. And it completely changes where I'm supposed to click. So you still got plenty of breakdowns. Abby V. I don't know about you guys, but I've been watching Abby V for a break for a while. Not there yet, but certainly pushing support level. I can't remember if it was Scott who brought up CI yesterday. I know one of you guys did. That has to be in a barrel breakdown watch list in my mind. So certainly weakness in some places. Abby V. We looked at Abby V. Another one, a little bit of a kind of opposite of our Anthem, where we've kind of held a resistance zone all week in Anthem. We kind of held the support zone all week in Agilent here. I'm not going to try to mess up their name. Of course, we know where CVS is. It's been hanging at that support level. So again, much like it's been for a little while now, certainly I'm open to both sides. I'm pretty sure I was the most bullish, and it wasn't very, but I think I might have been the most bullish on the healthcare sector of the coaches here. It doesn't mean I was very bullish. It just means I had even maybe a little bit of a bullish bias to it. So I'm going to like some opportunities in there. If the market has a rally, I'm going to be looking at things. Maybe it isn't Anthem necessarily, but I want to be looking things like the Mercs and the Anthems and the things like that are at least showing some independent, interesting signals. And while we may not need any bullish trades next week, with the way the market looks today, it's hard to see a lot of strength, but we've seen this before. It doesn't mean we don't need some bullish trading opportunities. Like I said, the bears, they're not hard to find this week. That's for sure. Things are hanging out at support or broken support or continuing to fall off of support that we've been building into over the week or even more at this point. Over in the discretionary, did give out on that 112. Didn't like to see that kind of hanging right at that that 200-day moving average. Not great. We made lower highs and lower lows. That 200, kind of that last level. Beyond that, I mean, there's quite a bit of space. We kind of talk about that on the Dow Jones, and one of the concerns that you may have to have, at least on the ETF, is if we give out here, we do have this little swing support that we set up in March. As maybe something that's about that 108 mark. But beyond that, I mean, there's just not a lot of support, right? There's big ranges from last fall. There's a lot of room, which concerns me from a bearish perspective within the discretionary sector. Now, I think we're going to still kind of look at these things a little more on an individual basis. just skewed mostly to the bearish side. You had Amazon break down today. Hard to trade that with that gap, but certainly not a great look by any means. Home Depot's kind of hanging in there. McDonald's actually took a run at resistance, so I have these guys in my watch list going into next week. Starbucks kind of hanging out on that 50-day moving average. So it's not all doom and gloom in there. We have so many of the retail companies that have just, I mean, if you look at, was it XRT? Is that the, yeah, that's the retail ETF. So many of the retail companies that have reported earnings the last couple of weeks, and those have really been kind of the names that have been reporting it for S&P companies these last few weeks, just have, there's been a few winners. DG had a really nice report, a few other ones, but for the most part, they've not been great, and the stocks have been beaten up pretty terribly. And so they're definitely having a little bit of a negative influence on that XLY ETF, but I do think we have to respect them nonetheless. An area that I'm open to both sides, again, skewed to the bearish side as we're moving into next week. There are things, McDonald's break, a Starbucks bounce off of the 50, things like that will always be, worth looking into. Maybe you do something and maybe you don't, but I always think they're going to be worth taking a look at. Over in the REITs, had some really nice movement in the real estate sector here today. Had that little turnaround candle yesterday, had that upward movement here today. We did come off of the highs here. That last little bit of the trading day, you had some profit taking come in. That last 45 minutes or so, you saw some selling and what I would assume at least would be some profit taking. I think we do have to kind of keep an eye on this resistance zone. We tested it here today. I still like the REITs. I still expect to like the REITs going into next week, one of the few areas from a bullish point of view, but I'll like them a little bit more once we get back above that. Much like the utility sector, we've broken it, so I'm not quite as worried about it being a huge deal as I would have been had we never broken it, but I'm always going to feel better when I don't have it sitting on top of me, right? That's just always going to be the case. So REITs look pretty interesting. So some of the defensive areas kind of coming into the forefront here today. Over on XLC, breaking support just like everything else. You have Facebook. It was able to break down on this support level. I would argue downward movement on Monday morning is confirmation to the bearish side, lower highs and lower lows. It had held up nicely up until today, but today happened, right? And that's not a great look. They're certainly very a big part of this ETF. You have Google that did kind of the same thing. Not really a great trading environment for Google because there's just too much stuff in my mind, but still not a good look, right? Still certainly bearish, breaking support. You have the things like AT&T and Verizon that just a few days ago were looking like, hey, they're fighting resistance, hanging in there pretty nicely. Here today, it seems like that potential bullish breakout is a long ways away on these guys. Verizon in particular looking pretty rough. So within this space, even things like the video game companies like EA, kind of sitting right at a support level. Activision Blizzard has hung in there a little bit more than maybe some other companies, but it's certainly not a great look. I think we have to start to be putting a little more skew on the companies within this sector to the bearish side as well. So, I mean, it really is the same, just a little bit more for me. Still, we've been, working into bearishness all month long, and now just a little bit more. Today, cleanly breaking. We don't have a lot of, support in the short term to hold us up. We still have that negative sentiment. We're still very afraid of anything trade war related. So continue to be looking from a bearish perspective overall. But of course, I'll always keep that open mind to the bullish side of things. I want to trade what I see. And sometimes things that are going up in a market like this, well, hey, they're going up with or without me, right? Might as well be at least open to entertaining them if I need a little bit of bullish delta in my portfolio, but not a lot of great reasons to think that Monday is the day that we turn around. It'll probably take a really positive tweet before, for that to happen. Taking a quick peek at some of the stocks that we had in our watch list we're looking at yesterday, most of these things are still in my watch list this week as well, or going into next week as well. We had PPG breaking that support level, so a little bit of a, confirmation candle, I guess, if you depending on your rules, of course. I would say that just needs some movement to confirm the confirmation candle. So we saw the breakdown in PPG, another breakdown. We saw that here in Chevron. We looked at Goldman Sachs already, but they broke down. A few bullish things out there, actually, for the most part, hung in there pretty nicely, though. ICE holding its breakout. T-Row, another one that hasn't, in my opinion, at least confirmed. So certainly an interesting setup for if I'm looking for new bearish opportunities here next week. Our REITs did pretty well, actually. Those pullback REITs had a really strong day over in public storage. Not quite as great of a day, but certainly a very positive day in Welltower as they kind of ran with the strength of the REITs as a whole here today. We looked at Anthem. I like this pattern. We've talked a little bit about it. I like when these reversal type of patterns come together. It hadn't broke out yet, may or may not ever break out, but I would at least like to look at it if and when it does. Other side of it, our CVS still hanging right above support. I think we looked at Merck already, kind of hanging to that trend line. UNH kind of doing the same thing. On some of the bullish trends, like where NOC, another one, NOC kind of looks like UNH, where we had the the upward movement yesterday and kind of the downward movement, but held support here today. It will come down to how you potentially like to get into these things. You can use intradays, but you can also just use the good old-fashioned, well, let's get above the swing high resistance just in case it turns to something else, right? So certainly areas that I'm still interested in. I think we looked at AIM here breaking down here, have to like that. The waste management companies, including RSG, good solid day here. Pepsi, Amazon, we looked at a breakdown, but a gap, and that probably wasn't going to trade Amazon anyway. But Pepsi still kind of hanging in there at this old, I'll just still a line right here, at this old breakout point, at those moving averages. A little bit of weakness has crept into the sector. I think we have to admit that, but independently, Pepsi is holding up okay. I could definitely be okay with that. Charles Robinson kind of still hanging at that support level. Looked like they were going to break it early, but did not fall through there. Dollar General, much like ICE, holding that breakout point. eBay still sitting on that support level, but boy, it's knocking on the door. I think we looked at McDonald's. They took a shot. I'm certainly interested in looking at McDonald's once they close above 200. PayX still kind of sitting that little bullish pullback type of a pattern as well. RHI gapped over most likely what would have been at least my entry. And so still bearish, but probably have to see some sort of a retracement to want to get excited about that. Starbucks continuing to sit in this little pinch between the 50 and the 9, right? If we can push above that, maybe we could talk a little bit. Adobe breaking down out of this little triangle that we put in these last few days as well. Don't really have any support until we get down to 267. So if we can't get back into that range, that's probably not a good look for them. Who else do we have? ANET. Yeah, I like ANET for a breakdown potential next week as well. So again, there's still great things out there, even though I think for me at least, they're mostly skewed to the downside. Still some nice things. We had Fidelity Information, or whatever the heck their name is. Nice movement. Trip hanging out at that support level yesterday, broke down and closed below that today. So lots of interesting things out there. Most of these things are still going to be in my watch list for next week. The only ones that might be a little difficult, unless I'm looking at pullback or things that are going to kind of look like an RHI. That was a nice break. It just gapped too much for my tastes, at least. And so I probably need some sort of consolidation or rally. But many of these things are kind of either get a little bit more confirmation or still kind of hanging out there. So certainly some interesting candidates, I think, going into next week, even some interesting bulls next week. And of course, and good afternoon, Ilka. Yeah, I'm glad you made it, my friend. We looked at some of these, probably all of these utility stocks. So we're getting some pullback opportunities in utilities. So again, I think we're going to stay skewed to the bearish side until we have any reason to believe that we need to not be. But that doesn't mean, just like when we were, pretty darn bullish in April, right? It didn't mean we never were taking bearish trades. At least that's not what it meant for me. So just you're kind of flipped the other way at this point in time. Over in the VIX, a little more of a spike here today. Again, today was just another reminder in case anybody needed it. I know none of you guys needed it, but that's the world that we live in. That's the market that we live in right now, right? A tweet can really push us one way or the other. You can like it or you cannot like it, but you have to kind of accept that that's where we're at. On the dollar, quite a bit of selling. I imagine part of that was going to be just, that tariff stuff is going to hit the dollar. What really I don't like, because that's just, that was today's story and that can be gobbled up really quick. But we're still fighting to capture that weekly breakout. It looked like we were almost certain to catch it even yesterday. But here we are yet again. For me, as you guys know, I really need to see it close. At the time, it was just these two bodies right here. Now it's turned into something more. Still overall bullish on the dollar. Still like it. I still don't think that breakout has confirmed on that longer term time frame. Pullbacks on the dollar have been pretty interesting. Let's see how this one goes early next week. We do have our swing low from this week that I think as long as we're above that, I don't think you can make much of a bearish argument on any swing time frame. But I would argue that the 50, with how receptive it's been, is probably in play as well, in my mind. Still waiting for that body close above that breakout. I still expect to get it, just not today. And yeah, let's take a quick peek. We'll look at them here in just a minute, Ilka. Let's work through our commodities first, and then we will take a peek over there. A good, solid day for gold. We saw that bullish signal yesterday, and boy, this was follow through. So this was some serious follow through. Again, we start to see that we can still move into gold when we're scared, when we're a little on the nervous side of things. That was a huge movement over in gold. Just another reason to like it. What's really interesting on gold is if you look at the monthly chart, and I hope I can do this without getting rid of all my lines. There we go. We'll zoom out here. On the monthly chart, little bit of a pullback, nice confirmation candlestick. I'm liking gold, more and more. We've talked about it all week long. I wish, maybe it, well, it depends on if you're in or not. If you're not in, you wouldn't mind it not moving up quite so fast. If you're in, you're thinking, what the world are you talking about? Move up faster. We're going to have different levels. I don't want to get overly excited just yet, but just more reasons to be thinking, finally we can start to be looking into gold for bullish opportunities. And that's been a while. Right? It's been a while since we've, at least I've been able to say that. We're going to have a lot of little things. We're going to have this swing back up here, which is about where we stopped here today. Probably one to keep an eye on is going to be this little top out around 13.25 as well. And then we really don't have much beyond that. So I would imagine somewhere along the way we'll get a consolidation or a pullback or something like that will develop, at least hopefully if you're looking for a new entry into gold. But we're going to have different levels. Still want to see this 50-day moving average hold. That's kind of the line for me. If it wants to pull back, and that would be fine with me if it did, I would like to see this 50 hold. These short-term averages are going to start to catch up with us as well. So a very solid end of the month. I look at that monthly chart on gold and I think, wow, that looks like a textbook bullish retracement. Three candles down, confirmation candle. Hard not to like that. On the other end of things, you saw a little, saw some movement here today. You have to give silver its due. It had a decent day as well. Certainly not the strength of gold, but unlike gold, where I think there are legitimate bullish signals on silver, I don't really think you can make that same argument. You look at it on the weekly time frame, still just in that drift to the downside. Whereas you look at gold on a weekly time frame, you saw quite a bit of strength, a nice floor being built, tough trading environment. And I wish, I wish in hindsight I was buying it at 1270, but I wasn't, and I don't feel bad about that. But closing above the 9 and above the 20, this again, it looks so much stronger to me than silver. So while I'm very interested from a bullish perspective on gold at this point, not so much on silver. First stop, we have to break out this swing high. We did take it out on the intraday, weren't able to hold it. Did close above that 9 EMA. Have to give it the credit there, but we have just so much to work with. Trend lines, moving averages on the daily time frame, on the weekly time frame. That's not perfect, but kind of illustrates the trend that we're still in. The falling 50, the falling 200. I mean, if I'm looking to buy some metals, I can't get the argument at this point for silver over gold. Show me a little more strength, maybe we can talk, but we need more development. There's just, I mean, there's a million little things. The trend line, the 20, have to respect these moving averages, have to respect $15. Quite honestly, for me to be interested in silver, it probably at this point at least has to reclaim $15 for me to have any real interest. Over in natural gas, a very ugly day in the world of energy, and natural gas was taking part of that, rewarding anybody who traded that bearish retracement on the weekly chart fairly nicely here this week. Just another, we haven't broke down, at least in my opinion yet, but we are so darn close. My confirmation is going to be the lows that we set up back in April. That is where I will be looking. A break below that, I will call, of course, for me, that would mean a close. I will call a break below that, confirmation of a break of this long-term support level. We'll see how the open this week impacts that, because that, depending on the open, that could happen on Sunday. So it's hard to feel like natural gas is ready to turn around just yet. Really quite a bit of selling these last couple of days in natural gas off of that, that battle. It was a fun battle, but it looks like, at least for now, we know who the winner was. And lastly, over in crude, boy, we broke yesterday and we just continued to break here today. And it was ugly. And it was beautiful if you were a bear, right? And I don't think you guys were. I know I certainly wasn't a bull. So probably didn't hurt, the bulls, because they probably weren't involved at this point. Very, very weak. It's, again, not a good look on crude, kind of in that spot where it's kind of bear or bust at this point in time. You can kind of see we do have some history here, and maybe we close right there, but I would argue we actually pushed through it. We kind of looked at that 54 yesterday. There's not a lot. Now we're really, have taken a huge dive in a very short time period. It would be nice if it would consolidate and break like it was doing on the way up. That was very nice of it to do that. But certainly at this point, it's really hard to want to be looking at anything, bullish in the world of energy, in my opinion, right now. Probably 50, the next real, notable price point. 50 can have an impact when it comes to the commodities. It's who doesn't like saying crude at 50, whether it's a bull or a bear. That kind of feels like it's the next wave. I'm gonna look at 56 as kind of the first level of resistance, but really I just can't see any bullish argument here either. So very bearish end to the week, and it's that's just the way the week went. It's just crazy in some ways, not really crazy, but it's just good reminder that, what was it, Wednesday or Tuesday of last week, it was looking like a bullish retracement on the weekly time frame. Now that gave us those sell signals by the end of the week. So hopefully we either profited on the bearish side or didn't get hurt, at least on the bullish side this week. But what a difference a week can make when it all comes down to it, right? So that's where we find ourselves on our commodities. Ilka, per request, we'll take a quick peek here at our PayPal and our American Express. These are always tougher things to trade in my mind. I mean, you have to appreciate the relative strength. And so if I'm looking at anything bullish, I mean, these are the type of things I'm going to be looking at. I'm not going to try to find a sweet deal on a beat up stock. That's just not my style. At this point, for a nice clean entry though, Ilka, for my style, it really kind of comes down into the break. Now, if I see something develop, maybe that can change, but just very rocky. It's hard to even kind of set up, come into a shorter time frame. It's hard to even set up much of an entry that would feel good, at this point in time. It's not that I would really bet against them, so much as I just wouldn't feel, again, it's my style. I don't like when things start to get choppy. I tend to stay away from them when that is the case. And hey, Johnny, good to see you, my friend. Nice to see you live and in person. So So you did a short call. Yeah, and so this resistance level is what I'd be looking on. I wouldn't want to be betting against a chart that looks like this. Happens to be PayPal, but it really wouldn't matter what the ticker symbol was to me. I would be looking at the 50 kind of as the primary catalyst to hold this up in the shorter term. So the break would be kind of where I would be seeing the stronger buy signal. I mean, I had kind of a similar and had similar kind of thoughts on APD, where I really like APD. It's been very good to the bulls as of late. I just don't like when it gets on the choppy side of things. But no sell signals really, just not any buy signals. And over on American Express as well, we're going to be seeing. So yeah, absolutely. Over on American Express, little more cause for concern, I would say. Was looking for a breakout. That still, I guess, theoretically could be in play, but that's a ways to go. We have taken out support here today, holding that 50. Now we do have some, history here. So let's go into a weekly time frame here. So I would say that's a little bit of a short-term signal, especially if that 50 SMA gives out. We do have quite a bit of a breakout. This was a really good breakout point on AXP. I know some of you guys actually traded it when it broke out of this little cup and handle on this weekly time frame. So I think on a support level for me, that's really kind of the line in the sand. But turning over, we're now seeing that falling 9 below those averages. We have broken our previous swing high. Not the end of the world, but not a good thing. It's hard to make that out to be positive in my mind, at least. So I'd be keeping an eye on, for me, on American Express is this breakout point. This was a good little breakout that we had here for support level, but to get there, we've already broken some support. We'll have to push through that 50, showing some signs of weakness. I'm going to feel that there's probably stronger charts out there than American Express from a bullish point of view, and I'm going to feel like there's better bearish charts out there from a bearish point of view. So, and these type of things, the Microsofts, the AXPs, the APDs, those type of stocks, they're either, if I see some nice buy signals, maybe I'll look to do some bull call or bull puts on them. That's kind of how I'll be looking at it primarily. But I'm going to prefer things that haven't, taken out, swing lows and things of that nature. So. Yeah, I don't want to, I don't want necessarily always, I don't want to turn drastically from being a bull to a bear. Usually, in my experience, that is not what works for me. If it's, if the trade is completely flipped, it usually means I've got better options elsewhere. So at least in my own experience, I know I can only speak for myself. And this is, I guess, is one of the problems that the bulls are going to have as we're moving, potentially going to have as we're moving into the next week. It's American Express here. I wouldn't want to go bearish on this chart, but that doesn't mean I'd want to go bullish. I want to buy something that looks like this, and I'm just me, but I can't imagine that most traders are saying, yeah, that's a sweet setup. Let's go buy it on Monday morning. And that's kind of what concerns me from that bullish perspective in the shorter term. So many of these charts that maybe aren't bad, they're no longer looking all that great. They're looking a lot more neutral. Let's wait till it breaks out again, and then we'll go from there, right? And I know that that's just my way of thinking, and the market is not me by any stretch. But I imagine I'm not the only person who thinks that at the same time. So thanks for sharing those charts, Ilka. Certainly appreciate. Always fun to look at some new charts. I guess I better let you guys get out of here so I can get to the scouting report meeting. But as always, you guys, thank you so much for joining me. It is certainly a pleasure to have you here. I appreciate everybody's time. Always great to see you guys. And thank you for those of you. I know more of you watch it later than join us live. So thank you for watching later. I hope you find it helpful as well. Of course, guys, if you are new around here, be sure to subscribe to the channel and hit that notification bell. Join us over on Twitter as well, where you can find not only me at Frank Martin23, but you can find Tanner, you can find Johnny, you can find Ilka. There's a bunch of us. You can find Emily. So it's not just me. We'll certainly invite you to join us over on Twitter as well. So hope to see you over there. That's going to do it for this week, and bearish week it was. So as we're moving into next week, again, we're going to have to, in my mind, have a bearish skew. I don't ever want to make that. I don't ever want to think that it's all or nothing. I don't like to think like that. Sometimes in hindsight I should. I understand that, but I'm always wanting to be open, to hey, what if next week's a bullish week? What about the day after Christmas? Who is bullish the day after that Christmas Eve sell-off, right? I don't know anybody who was, yep, this is the turnaround point, but that was the turnaround point, right? I'm not saying that's what Monday is going to be, but I think it's important, just like it was important when we were in the upward move, to have candidates on both sides so we are ready to do whatever the market throws at us. But we're going to continue to, it looks like, live in a world of heightened volatility, super reactionary to anything that has the word trade in it, which is really interesting when you're trading. So that's the word that gets us. But that's where it is. So we will see where we start off here next week as we move forward. Of course, check those futures before Monday's open, see kind of how it looks like traders are responding before we get ready to roll on Monday morning. So thank you guys so much for your time. It is my pleasure as always. Again, if you haven't had a chance to get signed up for the S.T.E.P system webinar, certainly invite you to do so. Just head on over to tackletrading.com. We can get you in there. It's going to be a lot of fun. It's really cool. I think you guys are going to enjoy it. I'm looking forward to it. It should be a lot of fun, and it's going to be helpful in a lot of ways, I think. So hope to see you guys over there. Have a great weekend, everybody. Get ready for next week, but make sure you're spending some quality time doing the things that you love with the people that you love, because the market's going to be ready for us Monday. We might as well have a little bit of fun between now and then. We'll get you the newsletter and those scattering reports here tomorrow, so you are ready to go. So get out of here, guys. Have a fantastic weekend. Again, thank you for your time. I will look forward to seeing you all same time and channel here on Monday afternoon. Have a great weekend, everybody.